Hi guys, I'm back and welcome back to the channel. In this video, I'm gonna break down how I was able to come up with this trade idea, which formed on Friday, the 11th of April 2025 on Nasdaq. So this is me trying to journal my journey while running the ICT 2022 mentorship. So without wasting much of your time, let's get into the charts. So from the first video that I made, I said that for a trade setup to be valid using the ICT 2022 mentorship, so far the things that I know are these 5 things. The first one being that I'm looking for a higher time frame PDLA to be hit. This can be fair value gap or a previous low or a previous high to be swept since there is liquidity there, or else it can be a order block to be hit, either a bearish order block or a bullish order block. It depends on the direction of the market. And the number 2 thing is that I'll drop into the 15-minute time frame to look for a sweep in liquidity. That is after a higher time frame PDLA has been hit, and I'll look for liquidity to be swept. This is prior to 8:30 New York time, and then I'll go into the smaller time frame, either within the 15-minute time frame, 5-minute time frame, 2-minute or 1-minute time frame, to look for a shift in market structure. And then after finding a shift in market structure, I'll go in the price cycle that formed the shift in market structure to look for a fair value gap. So after the fair value gap has been formed, I'll wait to see the price return to a fair value gap, and that will be my entry. So I'll remove all these lipsticks on my chart so that I can be able to show you clearly how I was able to come up with this trade idea. I'll start from a 4-hour time frame. So far so good. We can say that our price action has started going bullish. So we're gonna mark our higher time frame PDLA, which will be this 4-hour candle. This one, we can see that there is this space here, the gap between this candle and this candle, which is our fair value gap. Others call it a liquidity void. Why is it a liquidity void? There was speed in market delivery, or in other words, the market didn't deliver sideways. So after marking this one and hitting this bearish fair value gap, the market started retracing lower just for it to fill the void, this 4-hour void. Alright, so you can see that here I've marked this gap, which is our higher time frame PDLA. So you can see that after the weekly PDLA was hit, which is liquidity which is residing here, the price action started going high, and it went to hit this 4-hour bearish fair value gap. And after hitting this 4-hour bearish fair value gap, the price started delivering low in order to fill this void here. So since we have seen that the price has come back to the higher time frame PDLA, which is this 4-hour void, we'll drop into the 1-hour time frame. And in the 1-hour time frame, we're gonna look for some other things also which can give us a clear direction of what the price is really doing. So here on the 1-hour time frame, we can see that there is this other fair value gap, which can be marked as our inverse fair value gap. We can see that this gap was not tested, so we'll mark it as our inverse fair value gap, because on the IFVG, which is the inverse fair value gap, the price can also react, and you can see how the price has reacted on this 1-hour inverse fair value gap. Here the price came within the 4-hour void, and it came to hit this 1-hour inverse fair value gap and started pushing high immediately. So after this has been marked, we will drop into the 15-minute time frame to look for a liquidity sweep prior to 8:30 New York time. And here we have already marked our 8:30. and we'll look prior to 8:30, and we are seeing this odd low here, and the market came to sweep the liquidity which is residing under this odd low. So I'll mark this one. Let me zoom it a bit and mark. And the good thing is that the liquidity has been formed prior to 8:30, so that's the good thing. So far, the things that we are seeing are aligning with the things that we look for in the market. And after liquidity has been swept, we start looking for a shift in market structure. So we can look for a shift in market structure in the 15-minute time frame or 5-minute time frame. If not 5-minute time frame, then we're gonna look in the 3-minute time frame. So far so good. On the 5-minute time frame, there is nothing that we're seeing, so we still drop into the 3-minute time frame to look for a shift in market structure. And so far so good. I can say that I'm not seeing a shift in market structure, so I will try to drop in the 1-minute time frame to see if there is anything interesting. I wish I was seeing this play out, as it would have been a very good experience while learning this mentorship. Alright, so we are here on 1-minute time frame. So the good thing is that the market came to sweep that 15-minute liquidity, and the good thing is that we are seeing a shift in market structure. Yeah, I can call it as a shift in market structure. And we can see that after that liquidity sweep, the price started going high and it formed a little fair value gap here, but unfortunately there wasn't a shift in market structure, so the market started retracing again, and it came to hit the very low, which is our 15-minute liquidity. So it came and swept that one here, and it started going high, and it formed this market structure shift. This one, others call it a break of structure, so I'll mark this one as a break of structure. So on market structure shift, we mark either the odd high or the odd low that caused a sweep in liquidity. So we'll go in the price tag that has caused a shift in market structure to look for a fair value gap. And this is what we mean when we say fair value gap. This gap which is formed between these three candles. Alright, so let me mark this one. This is our fair value gap. So you can see that the price continued going high. It took something like an hour for it to return to this fair value gap, but still it came to the fair value gap. And the good thing is that our fair value gap formed within the kill zone. So what's our kill zone? When we talk about kill zones in the indices, our kill zone is between the 8:30 and 11 o'clock. This is the AM kill zone. So we would have been there waiting for the price to come and hit our fair value gap, or else we would have just set a market order here. So I'll put this one. I'll put this one here on our fair value gap as our entry. Put our stop loss here on the odd low or on the low of the candle that formed a shift in market structure. So this one could have been our stop loss, and for the target we'll go into the 15-minute time frame to look for a close target, which is a low hanging fruit, as the mentor ICT usually say that we should look for a lower hanging fruit. So I'll try to look for that low hanging fruit. I won't look for much. Yes, so our low hanging fruit could have been this odd low. So this one could have been my target. So I'll drop back into the 1-minute time frame to see how big our target was. Of course, that target isn't easy, man, to hit. In order for that target to hit, it isn't that easy. Like it will take hours for the target to hit, and it did. It took a lot of hours for that target to hit, and if I'm not patient enough, would have end up closing the trade without hitting the TP. So the other best thing is for us to take partials. So it needs a lot of patience for you to watch the market go and hit your take profit.